Alright, you're still with Business Day here on ET now. Raghuram Rajan, RBI Governor, is taking questions from one and all at the BANCON in Powai in Mumbai. Let's cut across live and listen to him.
And the Fed will go back and forth, and we'll hang on to every word that Ben Bernanke says or Janet Yellen says. To my mind, a more useful, productive way of us using our time is to look at our own domestic issues, the problems we have, and focus on cleaning them up. My sense is that when the world sees us dealing with whatever challenges we have and moving on, that takes care of a lot of apprehensions. That if we keep looking outward rather than looking inward at this point, we may get distracted from our true mission, which is deal with the problems that we have. And I think the finance minister this morning talked about some of the issues that he's dealing with. I've told you some of the issues that the RBI is dealing with, but we need to focus on resolving our problems, and that is the best way, to my mind, of dealing with tapering. I will say that we are in a better position now, partly because of the current account deficit having come down significantly, not just in the government or the RBI's perception, but in analyst perception since perhaps July. But also, I would say that an added sort of benefit during this time is we've sort of demonstrated we can raise resources if need be. And so I think that's also a valuable addition relative to where we were in May, June. And I'm focused on what we need to do domestically at this point.
Mr. Governor, congratulations for inspiring address. Do you feel any need for addressing the issue of P-notes? Rather further regulation about promissory notes at this critical juncture?
That question comes out of the blue. I haven't given it much thought. I understand there's an issue of concealed identity and so on, but at this point, I think it is something that has been allowed. At some point, let me leave it at that. I'm not sure it is a major issue right now. At some point, it will perhaps come on the table. Right now, it's not the central issue I'm focused on.
I hope to ask later.
Yes.
Governor, you just told that you have to curtail inflation, you have to stop the little bit of demand side. How do you think it will affect our production and the local industry, how they will react on this?
No, I sort of said two things. One, that one way to curtail inflation is to increase supply. The other way is to slow down demand. And typically, you have to follow a balancing act. Now, supply usually takes a longer time to come in, and you can tolerate higher inflation until it comes in, but of course, inflation itself has negative effects on people's incentive to create supply. So this is really a balancing act. And I think you've seen from every statement we've made that we're following that balancing act. You want to make sure that inflation doesn't get out of control, but we've also recognized that we are a weak economy. That weak economy itself helps somewhat in inflation. In other words, demand is also weak. But I would end by saying that, in a sense, that's the only tool we have, interest rates, and it is a blunt tool. And across the world, central bankers recognize it's a blunt tool, so they are careful about using it. But occasionally, it has to be used.
It's a little informal question. As you stand in your office in the 23rd floor of RBI, what's your gut feeling about Indian economy in the coming weeks, coming months?
Well, first, my office is not on the 23rd floor, it's on the 18th floor. So if I stood on the 23rd floor, I don't know where I'd be standing. But as I stand on the 18th floor and I look outside, I see the port. And I've seen some ships coming in, going out to a greater degree than I saw in September. So that is telling me, that's telling me exports are picking up. That's good news. Let me be more serious. I mean, we are, I don't want to make forecasts of growth and pound on the table and saying we are in a period of recovery. We are in a period where we are sort of struggling to pick up. There is some evidence of good news, but, you know, for example, the IIP numbers don't confirm that we are in a period of strong recovery. We have to wait and see. I'm hopeful, as I've said before, the monsoon is going to help. The exports are going to help, and perhaps these projects that have been cleared by the CCI as they come on stream, that will also help. I'm very, very enthused by the strong growth in power. Power has many positive spillover effects through the economy, especially, for example, if power comes into the power-starved south, that will be very helpful for growth. So we'll see. I don't want to make projections right now. We'll take any growth that comes.
Sir, sir, even as you spoke about, restructuring of assets in order to protect economic value and where there is viability going forward, will the RBI be open towards having a relook at some of the stricter norms which are supposed to kick in from 2015 in respect of restructured assets?
I think one has to be very clear that we shouldn't meddle too much with the accounting. What we should focus on is getting the real asset back on track, and if there are impediments in the way of doing that, we will look at that and help as much as we can. We've been talking to a number of stakeholders and trying to figure out the best way forward. As I said, we will announce some measures very shortly. But at the same time, we have to remember that the Americans have a phrase for this. I'll use it. Take it in the right spirit. You can put lipstick on a pig, but it doesn't become a princess. Dressing up a loan and showing it as restructured, rescheduled, call it what you will, and not provisioning for it when it stops paying is an issue. Whether it's helpful or not, it goes back to the question somebody else asked about evergreening. I mean, anything which postpones a problem rather than recognizes it is something that perhaps is to be avoided. But what we have to do is make it easier to recognize a problem and to deal with it. And we are very focused on measures that will help recognize that problem and help deal with it.
Governor sir. Governor sir, as regards the new banking license policy, how the new banks will be structured from the cloning of existing public sector undertakings? From the cloning of how the new banking license policy will protect from being cloned of the existing public sector banks?
I think the RBI has given a number of guidelines and is hoping that the new bank proposals meet those guidelines. We have a committee looking at it, the Bimal Jalan committee. While it's looking at it, I don't want to comment on what we hope to see them do, etc. I have no doubt they will do a fine job. I think they will take into account the import of your question, how do these new banks add value, but let me not prejudge what they're going to say. We'll take their report as and when it comes.
The fund in India is varying from 12 to 14% or 15%, and payback period is restricted to 7 years. Although we understand at the outset that COD is not going to achieve or that, but people are trying to fit it within 7 years, and that is the reason that it gets structured for 2 times or 3 times. can't that be the payout period for 12 years like European countries where the acquisition of the hotels are made for a longer time of payback period and the rate of interest there is very low. Here when the rate of interest goes that and it falls another 2% of the penalties and it goes to the very stress within a very initial period of the, wherever the institution, hospitals and the hotels you see, where huge capex are there. And we understand that can't it be a door-to-door 12 years like that with a concessional rate of things so that the lesser account goes to the CDR and the things will improve. That is one way of thinking.
No, I hear your concern. First on the interest rate, I mean, let me just say this, and I understand the concern, but if you subtract 10.1%, which is the CPI inflation we had in the last reading, from your 14%, your real interest rate is 3.9%. That's about as much as they have in Europe also. So it's not so much the interest rate. I understand the real interest rate some businessmen don't like to consider because their inflation, the inflation they face is different from the inflation the consumer faces. We can get into that debate, and I understand that concern. But on the issue of the maturity of the loan and whether we can allow for longer maturities and so on, we are exploring those issues.
Just as to what he asked, with the country being dependent on more on the infrastructure to kickstart the economy, would it not be better for RBI to consider or allow the banks to raise resources through long-term tax-free bonds? I mean,
you know, this is where you reach the limits of my my knowledge, because I'm not sure whether we are supposed to allow you or whether the finance ministry is supposed to allow you on tax-free bonds. I mean, as I said, we will take the question under advice and look at it.
Sir? I think, sir, thanks a lot for the very eloquent address. First of all, I wanted to ask you about the currency situation in India. Given that we have a current account gap, which has come under control in the recent past, but the fact that we have had it all along and we will continue to have that, and given that an emerging country like India will need foreign investment all the time, from a structural basis, are we stuck with saying our currency is only as strong as the foreign investment flows, or are there other structural answers that a country like India can also address?
It's a very good question. I mean, you're asking effectively, is any level of current account deficit safe? And could it lead to turmoil, even if it's 2% of GDP, if the foreign institution investors decide to take off? I think the answer boils down to, do you have a package of policies that breed confidence? But I think the more serious implication of your question, which I have raised at international fora, is, you know, a current account deficit of 2.5%, if that we think is a safe level and run it for some time, could easily slip into 4 or 4.5 because of circumstances that might be, unfortunate, accidents, a Supreme Court ruling or two. These things could shift the balance quite quickly, and then you move from stable territory to dangerous territory. Does that then mean that you should be running a current account deficit of only half or 0, because 2.5 is too dangerous, you could slip? And I think the international community has to look at this, because the alternative then is for countries to have enormous reserves so that they can support a current account deficit of 2.5%, but in order to generate those enormous reserves, you have to go into surplus, and then you follow the export-led growth path that a number of other countries in Asia have led. I think this is a concern for the international community. If everybody decides to build surpluses, who's going to run deficits? And if we've been a good soldier and not focused on sort of maintaining a hyper-competitive exchange rate, are we going to pay the price through this kind of volatility? This is a question that the international community has to consider. What kinds of insurance mechanisms do we have for countries? Not us, we have our own reserves. I think we don't have a problem, but a smaller country which suddenly looks like it's running out of reserves when shocks hit.
Congratulations, Governor. Sir, good evening. My name is Sridharan, Action newspaper. From September to November, the price of essential commodities have come up like anything. Can you do something to control it? Because common man is suffering.
Not in the answer is we're trying. The comments earlier was, I think the nature of the comments earlier was we shouldn't try too hard, but I think your comment suggests that we should. And as I said, we are very focused on controlling inflation because it hurts all segments of society, but particularly the poorer segments. But more important, and this is something that people are not paying enough attention to, it creates a disjuncture between investors, producers, manufacturers, and consumers or savers. The saver today sees too low an interest rate because inflation is very high. And that's why you see savings migrating to gold. The producer sees too high an interest rate, which is why there are complaints about very high interest rates from industrialists. And part of the reason there's this disjuncture between the two is because high inflation. We have high inflation. I think we need to bring down inflation. I very much hear what you've said, and that is very much a focus on the RBI. Can I promise you low inflation in the next few months? No. The control of essential commodities over a month or two is primarily something that supply side effects can create. The good harvest hopefully will bring down the price of grain, potentially of vegetables. But I think over the medium term, that is 6 months to a year, our efforts can have some effects. And I would hope that that would have some effect on inflation.
Thank you, sir.
Young India needed a young governor, and India has achieved a lot in last few days since you assumed. My question pertains to Club of 50 has achieved a great height in terms of Sensex or Nifty, and this 50 doesn't need equity. The companies which went on drawing board in 2006, 7, 8 are struggling today, and that's the infrastructure. And I think we lack equity in there, and the banks can't support on a greater note. Can RBI or necessary steps be taken, some kind of a bond market or a junk bond market, where retail participation of local capital markets can support like equity these projects? Because right now, if public want to participate, I don't think so they can participate at a retail level for these kind of bonds.
Thank you. Very, very good question. First, don't judge me by where the Sensex is. It goes up and down, and I don't want to claim credit for it going up. I don't want to claim credit. I don't want to accept blame for it going down at some point. No, but the broader point in your question is very right. That as we deal with the current challenges, we have to create mechanisms for the future, sustainable mechanisms. And as you point out, one of the important mechanisms we need to create for sustaining the $1 trillion of infrastructure we need over the next 5 years is precisely a corporate bond market. So we need to create the mechanisms. Some of that is very mundane, more liquidity, a yield curve, things like that. Others involve institutional change, such as a good bankruptcy law, which allows investors in lower graded bonds to feel protected. So there's a lot of work to be done, and I think it's very early days. I don't think we have done a lot so far. We need to do far more in the coming days to make the financial system more resilient. But I'm hoping that as we deal with the current challenges, we create the bridge towards that more resilient future that you're talking about. So I'm hopeful, very hopeful that we can do it.
India as a country is obsessed with inflation of late, and the world is talking of taper, deflation, various other kind of. east or west, both sides. Can India, possibly something like Volcker did, Fed governor, India can ever achieve something of that nature to break the inflation?
I think, as I said, controlling inflation is a balancing act. You have to focus laser-like on controlling inflation, but you also have to be conscious that some of the work is already being done for you by a relatively weak economy. Now, what we have to do is measure how much we have to do more given the state of the economy, and that's why I said we are going to look at the data, understand where we are, and take further action on that basis. So let me leave it at that. I think our views on inflation are very clear, and I don't want to elaborate much further.
Sir, this question is on financial inclusion. Today it's been a hot topic right from morning. My question to you, sir, is that in developed countries, the financial inclusion is largely met by institutions similar to credit unions or housing societies. And in India, we have a large chunk of institutions like urban cooperative banks. So instead of bringing in new institutions, can we not leverage the existing infrastructure which we have already created for last 50-60 years and address the issues facing this sector? For example, it's suffering from dual regulation, and probably nobody wants to take accountability for regulating these institutions. With some sound independent regulator like what we have in US, a separate regulator to regulate the credit unions, can we not have a similar strong regulator with good sound AML standards? Can we not achieve, financial inclusion through these institutions, because they are already functioning in areas where financial inclusion is badly needed? So what's your thought process on that, sir?
No, I think there's room for both. I think we definitely have to work to strengthen the capabilities of our cooperative banks, whether they're urban cooperative or in rural areas, and we should do what is necessary, and part of that may require taking a second look at split regulation. But I also think that there is scope for new ideas, new structures, new institutions, and I don't think we should be scared of competition. I think competition will help actually increase value for the customer, which ultimately we're all focused on, and also will help improve efficiencies in all the institutions. And so I take your point that we have to help strengthen the cooperative movement, and that will be part of our agenda. But I don't think that strengthening the cooperative movement means that we should not allow new institutions to emerge. Let me stop there. Thank you very much, everybody, and good luck on the conference.
Thank you so much, sir, for taking up the interesting question and answer session here. And let's have one more huge round of...
That was the RBI Governor Raghuram Rajan addressing top bankers at the BANCON annual BANCON. He says that the economy is going through challenging times and the RBI will do its best to bring the inflation down without compromising on growth, something that Raghuram Rajan has been walking the tight line with his policy making recently. Rajan also says that banks must come down heavily on borrowers trying to milk the system, and banks should focus on improving the asset quality. He says that the taper talk is overhyped and we should try to put our own house in order rather than focusing on the US. And also he said that with no single data point or not one single number will drive our RBI's policy making in the future. That's RBI Governor Raghuram Rajan speaking at the annual BANCON at Powai in Mumbai. Moving on, Finance Minister P. Chidambaram too addressed top bankers earlier today at the BANCON and urged them to extend their reach in order to achieve inclusive growth. He expressed concern over the fact that most Indian banks are clones of each other, and he hopes that new bank licensees will be different. He